Okay, it looks like we are live. Just doing a quick verification. Cool. Yeah. Awesome. Welcome for round two. So, I've been doing a lot of live streams and just kind of putting some of my initial thoughts together as far as kind of how to really position different companies, mainly SaaS and AI companies, to help increase the valuation, how to kind of position it, and ultimately, what are kind of the best ways to leverage your knowledge base ultimately to help you kind of get acquired, to do the acquiring, and in some scenarios within our leadership team, how it actually help companies go public. So one of the things that I've come to realize is that the companies that I've been talking to, some of them are doing really well from an outsider's perspective, right? So some of them are doing 3, 5, 10, 20 million plus in revenue. And these are individual SaaS AI companies that are very good within their niche. But as you look deeper into it from an acquisition standpoint, some of these companies are actually worth nearly as much as they think. Hence why I wanted to really put something together that highlights that, what you need to do ultimately to be sure that you are positioning your company for a premium valuation and that your company is actually acquirable, right? And so the title of what I've put together, and I've spent a lot of time on this, putting together different frameworks, different positioning, highlighting some of my own stories into why I've put this together the way I have, along with different case studies of what you need to do and how you need to set up your organization to get a premium valuation and get a premium acquisition target, right? Because when you really think about when most companies or when most entrepreneurs or founders get paid the most amount of money, it's at the exit. So I'll say that again. When most founders or entrepreneurs, when they get their biggest payday and they look at their bank account, they go, holy cow. That is usually when they are selling or they have been acquired. So when you think about that, the work that you're doing to position yourself for a premium valuation is the most valuable work that you can ultimately be doing. So this has come from an evolution of me working in the video conferencing space. Started out in 2016, watched it blow up from 2020 to 2023. And there are things that I could have done that I didn't do that could have ultimately gotten me a huge exit, whether it was multiple 8 figures or even 9 figures. But because I didn't do those things in a certain amount of order, I paid a big price for it, right? And I saw a lot of my other competitors get acquired and rolled up and things like that. And I have done an acquisition in the space where we did essentially a roll up of another competitor. But if I did the right things in the right order, then maybe I wouldn't be doing this video and I'd be on an island or something, right? So, but what I really wanted to really emphasize is take some of the lessons that I've learned, and I've also helped apply that into real life for other organizations and other companies where we've helped multiple companies prime for an exit. Our leadership team has been responsible for over $43 billion in M&A transactions. Over the last 24 months, one of the leaders of Agile Growth Labs rolled up 70 companies together, and within a year and a half was able to bring it to over $40 million in revenue. And you don't just do that on mistake. That doesn't happen on accident. And we've been able to take our growth and exit engine systems, and we've been able to apply it into organizations to help them scale, help them be primed for a higher valuation, help them become a better acquisition target. And it can be a better acquisition target for a competitor, for private equity, for venture capital. And there's a ton of opportunity in the space. But now, understanding what I know now, it's very, very important that having that foundation in that ecosystem is ultimately going to be the thing that's the most valuable work that you can do for your organization. Okay, so what I've put together here, and I'm going to share my screen right now. I think it's going to share. Let me just be sure I got the right thing going on here. Disappeared to the disappearing act. So you're going to see right here that 87% of SaaS companies, 87% of SaaS companies never reach 10 million in ARR, and that's due to operational chaos. So what I'm going to be covering here, okay, is what if your 5 million annual recurring revenue business is actually worth $0? So what I'm going to do over hopefully the next 45 minutes, I'm going to go as fast as I can, but I want to be sure that the quality and the information is there for everyone to really, truly understand how you could apply this into your business. And I want to show you how SaaS and AI businesses can be more valuable to private equity firms, to your competitors, and position your competitors to actually buy you out, okay? And so at the end of this, you should walk away with a framework to give you the exact blueprint to increase your company's valuation and become acquisition ready. You should know how to increase your valuation score, so you're going to know exactly where you stand and what gaps you to close before you exit. And I'll actually give you an example before I hop off here and go on to the next slide here. I'll show you in a second. And then the fast track of how to implement AI systems to eliminate costs and drive revenue up in 30 days or less. I have done all of the above, right? So if we're going to start backwards, I've replaced a 20-person team with AI. I was able to take the same amount of revenue, the same operational deliverables for each of our clients, replace it with AI. I mentioned in one of my last videos that people are paying anywhere from $10,000 to $100,000, if not more, to get a valuation and clear next steps to increase your valuation. I'm going to show you how to do that for free and the different frameworks that you actually need to increase the valuation. So before I do that, I'm going to do a little shameless plug here, okay? In agilegrowthlabs.com, if you go into resources, you click on evaluation you can use. You will see here, you can get your free score, okay, directly in here. I have completed this, so this is why it's completed, and this is what the end result is, and this is what it looks like, where out of a scale of 1 to 100, it will lay out what your valuation score is going to be, your acquirability score, the value you're losing by not being at the 100 out of 100% mark, right? And what are the top priorities you need to do, right? So this will give you your growth rate, your customer retention. It will give you all the information that you need so you can understand how to increase the retention of your clients, how to increase your growth rate. And then if you click on your action plan, it will give you exactly what you need to increase your valuation, okay? So it'll break all of that down. It will give you all of the data that you need for you to understand and actually position to investors and other people who are looking to acquire you like a competitor of exactly what you need. This is completely free, by the way. You do not need to pay $1, $5, $10,000, $100,000. Totally free. Now, I am going to be charging for this very soon. I'm going to be putting a paywall in front of this. So if you are seeing this now, get access to it. Do it as quickly as possible. If not, I'm going to be sure this is the most affordable thing that you do all year, because you're going to walk away with an exact custom playbook of exactly what you need to do to increase your valuation for your individual company, because this gives custom feedback based on the information that we're gathering through this tool. Okay. So again, this is very valuable. It gives you the complete data of what you need to do to increase your valuation to get you, whether you're at the 50 out of the 100 mark or the 75 out of the 100 mark or whatever it might be, so you can have clear actions and deliverables to increase your valuation, your acquirability score. Okay, so this is everything that we have in here. I do have a playbook at the end. If you want everything and all of my knowledge basically in a book, that is available for $297. If you don't need that, if you don't want that, you don't need it, because I've given you all the custom information here, especially if I'm doing a paywall for you to get access to your custom valuation score. Okay, so that's the first thing. So in here, okay, the core focus that I'm going to have for today's agenda is there's a $40 million lesson that I had to pay for, okay? And I'll go into that story of why most SaaS founders are leaving millions on the table. I'm going to be covering our AI growth and exit engine framework that doubles valuation, sometimes 5x's it. Case studies from companies we've worked with that have successfully exited. And then from there, what's in the market versus our complete solution, right? So what if you have all the information, what you can do on your own, and how we can kind of deliver exactly what you need for you to get and cut down that time frame to get to a higher acquirability and acquisition and even an investment score, okay? And then how to get exit ready in 90 days with our proven system, okay? So by the end of this, you are going to know how to 5x your valuation in 90 days without scaling teams, raising capital, or working 80-hour weeks, okay? And so this is backed by a ton of data. We've done over 40, our leadership team has done over $43 billion in M&A. We've had 70 plus company roll-ups, worked with dozens of SaaS and AI companies to help them exit. So as far as the leadership team behind it, myself, Henry Kraus, I've built my own SaaS companies, my own AI companies, helped a lot of my clients that on the service side as well, and helped take companies from 0 to 6, 6 to 7, and 7 to 8 figures in revenue, helped generate over 1 million leads, done acquisition, operated, exited SaaS and AI marketing companies for the last 10 years, okay? So I've been in the trenches with everything, okay? My business partner, Jason Myers, he is a serial entrepreneur. He is a growth architect, right? So he's been responsible at the time for the biggest merger acquisition deal in telecom history. So if you remember the Singular and AT&T merger acquisition, whatever you want to call it, it was technically a merger, but they used the AT&T name, even though Singular at the time was actually bigger than AT&T, which is a story that we can get into another time. And then from there, he has been an expert in operationalizing marketing systems that drive predictable ARR growth, experience leading multi-channel campaigns, and partnerships that have produced multiple 9-figure revenue outcomes, right? So even if you look at how much revenue the AT&T and Singular deal has been generating for them, that alone is a huge behemoth, right? Not including all the other work that he's done for the last probably 20 years, okay? So as far as what we're doing, right, we're not consultants. Like, I mean, there's a level of strategy, of course, that you need, and in order for you to have the right strategy, you need to have the right deliverables, right? But we're operators. We've built systems that private equity buyers who actually pay premiums for, and we install those same systems into other SaaS and AI companies, again, to make them more valuable, more acquirable, and more investable, okay? And so we've done this multiple times. I've mentioned this, the 70 company roll-up, where, again, there was a bunch of companies that independently weren't as strong, but together as a sum were much more valuable, okay? And so within, I believe it was 18 to 24 months, he was able to roll up 70 of those companies and generate 40 million between those companies. I already mentioned the 43 billion telecom merger. And so the 4-week kind of like structure breakdown that we're going to be implementing and we can talk about later is really giving you the drivers and the blueprint, giving you the margin optimization, and from there, the growth systems and the exit ready roadmap, so we can help get you over the hump within the next 90 days if you're a SaaS and AI company. This will work for other companies as well, but specifically what I'm going to be talking about during this is for SaaS and AI companies, okay? And so again, when you look at the operational efficiency, the lead generation, and the overall cost for each individual company, and the overhead, it's pretty incredible of what you're gonna actually be able to walk away with. Okay, so as I'm getting into it, you're gonna see the exact strategies we've used to help companies achieve these premium exits and 5x valuations. Okay, so everything that I'm covering here came from really one major event. Okay, I mean, I've had my background again was started Jet Webinar, video conferencing company that was directly responsible for basically generating multiple, thousands of leads, actually over 1 million leads. Okay, we've helped companies use the technology to generate more revenue. So you can sell products and services, you can sell advertising space, you can you can have affiliate linking, affiliate tracking, so you can have more affiliates and have hundreds, if not thousands of affiliates use the system to drive more traffic to the video conferencing solution to turn that into more revenue. Okay, and selling like in tickets as well, tickets to get people to show up. And even some people actually use the technology as like a private TV channel. So for example, if you're to go on TV, and if you're to just turn on live television right now and you're seeing an advertisement, each advertisement that you're seeing is actually custom based on your location. So even though you have people in all 50 states watching the same show, they're all going to get custom ads. And we actually built our solution to do something very similar to that, right? And so there's a lot of ways that we were able to take video conferencing into revenue generation. And what we found was that we had a really cool meeting. I built a really great relationship with someone that was generating over $40 million a year into other people's software companies. And so I went to this guy and was like, listen, like, it is really cool that you're able to drive so much revenue to these companies, but you're not walking away with any of that enterprise value. So I'll kind of get into what I mean here for a second. So if you were to think about this in a general term of, let's say, Amazon. Okay, so for example, if you go to amazon.com/live, I can show you this right now, and I'll do that in a second. There are people who are influencers, big celebrity names that are doing a live stream, a live production, and they are highlighting individual products that anyone can go on amazon.com/live, click on a product, buy, and then the person who is streaming and talking about these individual products gets a kickback for talking about this product and basically being an affiliate of that product. Okay, so that's what this company was doing. Is they had partnerships with like 3 other software companies, and they would go on live streams, they would do webinars, and they would drive all this traffic to essentially these other companies, and they would get a kickback for each sale that they brought, but they weren't getting any ownership into the company, right? So for example, if I am doing a live stream on Amazon and I sell $10 million of product using my likeliness, my brand, my name to sell more product, I'm just getting a kickback for the individual sale that I'm generating. Now, Amazon is a publicly traded company, and the more revenue that they get, then the higher their valuation is, the higher their stock is going to be trading. And these celebrities that are driving traffic to Amazon are not getting any equity. They're not getting any enterprise value of what this company is. So if Amazon, again, increases their share, the value of their shares, and their stock price goes up, they're not getting any of that, right? So that means that they're losing all of this opportunity, and they're just basically an employee, right? They're just working they're working hours for dollars. Okay. And so I was having this conversation with this person that was driving so much traffic to all these software companies because they were not getting that enterprise value. They're not getting any equity. They're not getting a sales to equity model. And I was explaining to them and I said, listen, if you go and you can promote all these other companies, but if you also promote our company, Jet Webinar, we will give you a piece of the company for each sale that you make. And that sounded awesome, right? Because like, that is how real wealth is made. So he was basically saying, if I'm able to add, let's say $1 million in revenue into Jet Webinar, and that increases the valuation of the company 10 million, do I get a piece of that 10 million? And the short answer is yes, right? And so the realization that I had around that was most successful entrepreneurs around the world don't actually understand the fundamentals of what I've just explained, right? And so I created a resource and an ecosystem to help companies be more valuable. I wanted to show successful entrepreneurs who knew how to drive traffic and sales and revenue, the different levels of private equity, so they can become a successful business owner to an investor, right? So if that person drove $1 million in new revenue, then we would be able to raise money. There'd be, a tranche of cash that's coming in. They would get a piece of that. Their valuations would increase. Their net worth would increase. There's a ton of opportunities that come from that. You can do roll-up strategies. There's just a lot of other things that kind of go into it that they would never get with any other company, right? So this was kind of the pain that I saw with really successful entrepreneurs, and I wanted to go from pain to framework to actually outline how this can work, hence the headline of this slide, okay? And so the $40 million lesson that I learned from this was people don't invest in things that they understand. So they ended up not doing this deal with us, and I lost this major investment. I lost this huge distribution deal, and this was for Jet Webinar because they had other investors. They had other people that were working for name your investment fund, right? And they were basically just wealth managers, right? And they knew how to buy stocks, but they didn't understand how this applied to private companies, hence private equity, right? And their investor and money guy didn't understand private equity. And so people don't invest or buy things that they don't understand, right? And so this was the office. It was a cool office. This is this is our office in Vegas with this is where Jason mainly spends his time. Anytime I go to Vegas, this is kind of where we go. So we had this cool office. We had an awesome setting. It was a great situation. Everyone flew in to kind of come in here. And so and because that deal didn't go through, we're like, oh, what a gut-wrenching scenario. But the realization that I had at the end of this was that most multi-million-dollar organizations and most multi-million-dollar companies don't understand private equity. So the entrepreneurs who have and already became billionaires or will at least 10x their growth without working themselves to the ground, right? It's not just the grind and pushing and doing sales calls. These people who are going to be, billionaires versus millionaires understand private equity, right? So that was the day I stopped chasing sales. I started implementing my growth and exit model into companies who really want the option to sell for a higher valuation down the road. Okay. So the solution that I built here was really ultimately creating an environment of resources to help companies become more valuable, show successful entrepreneurs that can go from successful business owners to investors, right? And so when you look at the wealth gap of millionaires versus billionaires, it's understanding that people don't understand my story here, right? And so if people don't understand this, if they don't understand the private equity component and the framework that I just kind of laid out here, that is the only wealth gap. It's not like billionaires are saying, oh, this millionaire generated 5,000 leads and they closed 10%. And if I can close 15% instead of 10%. No, that's not it at all, right? It's it's really understanding how to position yourself from a private equity standpoint and understanding the AI equity engine, right? So you've got leads, you've got ops, then you're able to build an investor grade infrastructure, and then that will help increase your valuation, right? So there's kind of two prongs that I'm talking about here. There's understanding the private equity, and then taking all the infrastructure and the resources that you have of repeatable things that are working within your organization, training it with AI, removing some of that overhead, and then taking those people that are doing those repeatable tasks that can be replaced with AI and moving them into something more valuable within the organization. Now, I'm not saying if they're getting replaced by AI, cut them and increase your profit margins and all that. I'm not saying that at all. I'm saying put them towards something where you can actually, the organization and the company can see a output of their efforts, right? An output of more leads, of more sales, of saving your, just cutting costs, right? Of like, if someone's getting incentivized for having the same amount of output and decreasing the overhead, and maybe it is just having an AI implementer in the organization, that is adding value to the company, right? So the equity game of what I spoke about before, like millionaires versus billionaires, okay? The millionaires, they're building one company, they're trading their time for money, they exit once, they exit twice because they're building from the ground up, okay? And it's understanding the equity leverage that is the transition of going from a millionaire to a billionaire, okay? So if you're building portfolios, you're leveraging systems and capital, you're supporting multiple exits that compound the wealth, that is the thing that's going to ultimately get you there, right? And so if you are doing something along the lines of maybe you acquire or you're working or you're growing 3 or 4 companies that are kind of within the same ecosystem. So for example, if I have I'll go back to my video conferencing example. Let's say I have a video conferencing solution, and then I also talked about having a affiliate tracking solution. If I own a video conferencing solution and an affiliate tracking solution, I can have them become vendors of one another and referral partners. So even though I own both of them and there's money getting transacted between them, I am turning something that wasn't an expense into something that's more into leverage and revenue generating, right? So that's what a lot of companies do, is they'll look at something that's a huge revenue suck or a huge cash suck of expenses, and then what they'll do is figure out how do they turn that into an asset so those two can play nice with each other, okay? And so this is kind of the gap, right? This is the gap of combining those two worlds together. And so I'll show you this here really quick, where you see the bridge here from millionaires to billionaires, right? So most founders, where they're at, I think I screwed that up. Okay, here we go. Most founders, where they're at is they're trapped in this like dilemma. And again, it's no really different than what you would say about like maybe like a salesperson, right? They still have like a monthly number that they have to hit, or they have certain criteria that they need to do, and they're just grinding to get that result day over day, okay? And there's this constant negative feedback loop of they got to hit the number, they got to do this, they got to do that, and that's not how private equity works, right? So they're trapped in this dilemma of they need to build a successful company, but it's missing those strategies that are creating generational wealth, right? So there's no access to the M&A playbooks. Their valuation is based on revenue, and there's kind of like this, and you'll see on the bottom here, there's a founder, kind of operator issue where they're just working 80 hours a week just to grind through, because they think the harder that they work, the more valuable their company is going to be. And that's really not how it works, with, billionaires. If you look at like a Richard Branson, I mean, that guy works, maybe, I think all in all, maybe a few hours a day, because he has the right people and the right systems and the right infrastructure, where he doesn't need to be sitting in front of a computer all day to get the outcome that he's looking for, right? He's finding the best salespeople, he's finding the best operators, he's finding the best CEOs to plug into his companies, okay? And so when you look at where we want to take you, we're trying to break you through that wealth gap of really understanding, you know, the strategies that are reserved for billion-dollar organizations. We're giving you the M&A expertise with the AI marketing component, and then we're giving you the right systems and the M&A playbooks ultimately to increase your multiple, okay? And so we want to give you AI-powered operational excellence, which is what I cover down here. So if you look at the engine, you've got the AI-powered systems, you've got the premium valuations, and the thing that's kind of covering the gap between those two is the M&A expertise, right? So we want to give you a proven system that's evolved through client engagements, that has a scalable methodology for transforming SaaS and AI companies into a premium acquisition target, okay? So if you were to ask a question, and I know a lot of people do this, is that they often wonder. Move this screen down here for a second. So they often wonder, if I had a $3 million company, but it was a little bit more of a messy, the operations were a little bit more messy with a $3 million ARR company, is that more or less valuable than a company that's doing $1 million in ARR, annual recurring revenue, but all their systems are streamlined, the operators are there, the automated workflows are in place, everything's documented, there's the efficiency that's plugged in that has a strong feedback loop that's powered by AI. Which one's more valuable? And the truth is that the lower revenue company that has all their stuff together is way more valuable than a $3 million a year headache, because that's all it's going to be. It's going to be a headache. If you're an investor, a competitor, a buyer, you can't scale more of a mess. I mean, you can, but it's just going to give you a headache. It's less desirable, and it doesn't help the buyer down the road, right? And so this is the ultimate truth that everyone's actually missing, is that revenue doesn't drive the valuation, right? So that's why I said in the very beginning, if you have a $5 million annual recurring revenue company, it could be worth zero, right? Because buyers are invested, they invest in the operational infrastructure, the systems, the things that are repeatable, they're predictable, and they're able to scale without this like ongoing involvement of like, okay, I need to wake up and I need to check in with everyone. People just want to have a strong team. They want to have a strong infrastructure, and they want to have something that's repeatable, that ultimately that they can invest into, right? So here's the proof, okay? And I want to give you true examples in the space, and I obviously picked things that most people are familiar with, right? And these are deals that have already happened, that are very public, that we're aware of, right? And so there's other examples that I could, of course, bring to light, but I just wanted to do the ones that are just painfully obvious so you can understand the vision of where I'm trying to go with this, right? And so here are some examples where, when you look at Instagram, okay? Instagram at the time when it was getting acquired, they had about 30 million users. There was no true path to revenue. And so the public actually saw that Facebook was overpaying for like a simple photo app with no revenue, okay? And what the deal team saw was there was this huge distribution. They're able to get in front of 30 million eyeballs. There's a ton of growth, solid team, and they can use this infrastructure ultimately to leverage the paid ad game, which is what Meta, that's their main revenue driver, very similar to Google, right, was through paid advertising. That's changed now a little bit with something like Google, because now it has to be like AI driven. But I mean, if you think that less than 80% of the revenue of Meta or Google is not being generated through ads, you're just grossly wrong, right? So here's a very interesting fact that I really want you to think through, right? Meta, or at the time, Facebook, paid $1 billion, and everyone thought they were absolutely nuts. On the public market, Facebook, their valuation went up by over $1 billion in 5 hours. Meaning, Facebook paid $1 billion to Instagram. The public market saw this opportunity. They understood the story, the framing, the positioning, the branding, everything was in place perfectly. And on the public market, Facebook was able to ultimately get their ROI on this $1 billion investment in 5 hours. Now they're even more relevant over the last 13 years because of this. Just think about that for a second. They're able to get $1 billion ROI in 5 hours. So Instagram was probably like, we didn't charge enough, is what I would assume they would say, but maybe not, right? I'm sure everyone was happy at the end of it. Mint Mobile is another one, right? And so Mint Mobile is a very interesting deal, and I spent a lot of time looking into this because what the public actually saw was T-Mobile bought Mint Mobile. Mint Mobile was getting free advertising from Ryan Reynolds because Mint Mobile said, listen, we will pay you to do commercials. And he's like, listen, I am adding so much value. I'm giving you all this distribution. You're using my likeliness. How about you don't pay me cash? Give me equity instead. And I want to participate in the increase of the valuation, because if there's an acquisition or something that happens with Mint Mobile down the road, I want to get that upside because you were able to get more distribution because of me, right? And so that is something when I go back to, when you go back to this example that I was talking about earlier of this pain to framework, right, of the $40 million loss and me kind of explaining how private equity works to wealth guys, to wealth guys and entrepreneurs. Ryan Reynolds already understood that, right? He understood that game very well. And so then when T-Mobile went and acquired Mint Mobile, and I'll explain the deal and how that worked in a second, he was able to get a huge payout because he understood that he understood this. He understood what adding enterprise value and what the private equity game looked like, because it went from private equity to public equity pretty quickly. Because once T-Mobile invested or acquired Mint Mobile, that was just all gravy for him, right? So now the Mint Mobile deal, everyone just thinks that there was a $1.35 billion acquisition and then Ryan Reynolds got all of it. Like that's not what happened at all. There was actually multiple companies that were involved, right? So there's Mint Mobile. There's a group called you pronounce it Kiana Group Corp, and they were also acquired. And that was the holding company that owns Mint Mobile. And then there was another mobile company called Ultra Mobile, and then there's another company called Plum. So there was basically 3 other companies that were a part of this deal that was beyond just Mint Mobile, right? So they were able to leverage the distribution. They were able to target different customer segments. And so that's really kind of the deal in itself. And that's why they paid so much money. It wasn't for one company. It was really for 3, okay? And then the lesson around that was T-Mobile actually, of the $1.35 billion that was paid out, only 39% of that was actually in cash. The rest of it, because they understand private equity, was converted, or I should say public equity now, was converted into stock, right? So now the value that Mint Mobile and Ultra Mobile and Plum was adding to T-Mobile, they're able to participate in that. So as the revenue is going up, as the stock price of T-Mobile is going up and the enterprise value is going up, now all these other companies that Kiana Corp and Ryan Reynolds that they're all a part of, they actually get to participate in owning that stock. And more of like a private equity lesson here is they can use that as an asset. So if let's say Ryan Reynolds has $300 million of stock of T-Mobile, he's not, in order for him to, let's say maybe he needs $20 million, he's not going to sell the stock to get $20 million. He's going to use that as an asset, go to the bank and say, I want to borrow against this $20 million. So now he's paying 3 or 4 or 5% of $20 million, where the stock is still increasing. He still gets the cash, and he's able to take out debt against this, he's able to take out debt against his position with T-Mobile, meaning that he's able to get the cash and he's able to leverage the tax incentives because he's not getting paid as a transaction for selling the stock. He's actually bringing on more debt. So now when you bring on more debt, that's a tax benefit, and that's the billionaire game, right? It's like if a billionaire or a millionaire owns stock, they'll borrow against it, they'll hold on to the cash, and then they'll usually be able to make more than the interest payments on the money that they're bringing in, right? So it's not just lifestyle money. If they're borrowing on 5% interest and they're able to get 10% back, they can get the money, they can have the tax benefits, and then be able to repay it back just by making a strategic investment. So that was more of a side tangent. If you look at True Social, now this was right before Trump became president for his second term, I believe. So when you look at like the mainstream parallels for that, this was True Social, okay? So what I saw when I originally saw this deal was True Social went public, and this is if you don't know what True Social is, it's a social media platform. It had 5 million users on it. That is not a lot to command an $8 billion valuation. Let's think about how Instagram had 30 million users and got $1 billion, and True Social got 8 billion for having 5 million users, right? It's like peanut. It's really peanuts. So what the public saw, and this is why I wanted to dive into this and use this as an example, is that this was a political platform with a massive valuation, limited users. What the deal team saw was True Social was actually just a micro piece of the deal. What they wanted was Trump Media. So Trump Media, anything that has the Trump name on it, that operates as the Trump brand, it's not like he's acting as an individual influencer. There's a company that owns all of the Trump branding, right? So that is why Trump Media and True Social was what this is called is a SPAC, which is a special purpose acquisition. And so what this is they took the social media platform, which leverages the more of like a increased valuation for actually having more of a software social media platform, plus the media. So they own anything that is getting promoted by Trump Media, not just Donald Trump, but the family name, okay? They're able to monetize True Social and all the other products and services that are tied to the name, and that's what made it valuable. So now that is part of what was listed on the public market, and so it was about the future potential of where the Trump name could actually go, and obviously it's going to go further, and it's being leveraged in a lot of different ways that you may or may not know about since him being president, right? And so it's the right story, it's the right branding, the right vision, and that's what was creating the actual value there, okay? So when I look at like our valuation formula, okay, I can move this around again. But so like our valuation formula here is you're taking AI systems, you're adding higher margins, you're adding exit-ready systems, and this is what you need to do ultimately to increase your valuation, 2, 5, sometimes up to 10x, okay? And so this is how we help companies exit. You're taking the right systems, the right operations, the right positioning for acquisition, and you're helping SaaS and AI companies command premium multiples for those strategic buyers, okay? So this is what we've done internally as Agile Growth Labs. And so again, this is kind of like our proven, leverage formula. And so I had a scenario where I had an agency. We were doing a lot of like client fulfillment. We had 25 people on the team. And there was a scenario where we were delivering on projects. Clients were late to pay. Employees were being incentivized for working by the hour, not by the output or by cash collected. And there was kind of like this grounding point where we realized that if we continue to do what we're doing, we're going to end up going bankrupt because the employees didn't really care if the receivables were coming in, and the clients weren't caring about how fast they were paying us, right? So as the more we were scaling, the more this was becoming a problem, which happens with most companies. If you've ever really scaled a company before, this happens all of the time, which is why you have to have your finances and everything kind of dialed in. So I was looking at this and I was like, this is going crazy, right? Because we have a lead gen, we were using people for lead generation, for client fulfillment, for media, for ad management, for ad spend. So all these things all the costs were really blowing up. So I was looking at all this and I was like, this is getting crazy. So we were able to actually replace our overhead that was about 25 grand a month, anywhere from 250 to 300,000 a year, with $200 AI systems. And I just bunkered down really in like 45 days. And I was like, I need to figure out if I can use AI to do these jobs. But first, before I do that, let me work directly with our team to be sure that they're using AI to become more effective, get the job done faster. But they weren't incentivized to do that because they were getting paid by the hour. Why would they want to get more done in less time? That didn't make sense to them, right? So over a period of time, I was just forced into a corner. I was like, we have to do this, right? And so that's where I was able to go replace the entire team with the AI systems. And now we took the best people, of course, after we let them go, and we gave them an opportunity if they wanted to ultimately come back and use the AI systems to help them become more efficient, right? So we did that for ourselves. We ended up doing that for our clients. We ended up doing that for the SaaS and AI companies that we were working directly with. So then we were able to build clean operations that buyers love, right? So if we were able to go through and set up documented processes, take the frameworks that are working, and then plug in these AI systems, that was great, right? And that helped drive scalable growth. Same amount of revenue, same amount of output. We were able to do it in less time, powered by AI. That was way more valuable, right? So, most founders, they think they have got a revenue problem, but it's typically the systems problem of what I just explained, and then we solve that, right? Because if for most companies, if I actually look at what's going on within the organization, everything is probably working, right? You probably know how many emails you need to send to generate a lead, how many ads you need to have out, how many podcasts you need to be on, how many pieces of content need to be produced. Whatever your metric is, right? That's a systems thing. That's not like a revenue or lead issue. That's just a systems thing because you're stuck in the grind, right? You generate the lead, you get the sale, you do the fulfillment. By the time you're done with the fulfillment, then you got to restart the lead generation process. And if all these things are systematized and they're automated, then you can continue to do all three things, which compound your efforts. So you don't have to keep repeating the cycle over and over again. They're just scaling individually, right? So this is this is what we do, right? We take companies from stuck to sold, right? And this is where the theory of kind of what we're talking about helps with the execution of it. And we needed to do this for ourselves. We needed to do this for our clients. And then we needed to productize that system and that solution so we can help other companies do it, right? And I mentioned before the story of, let me go back here. So before of how I was able to go ultimately replace 20 employees with a $200 AI stack, right? So the process that we did was we had first of all, the benefits were the savings, the increased productivity, everything that we mentioned before, right? The improved decision-making, because it's all backed by data. And then we were able to improve the customer experience, and then we're able to scale, have more flexibility and scale, hence why we call our company Agile Growth Labs. We have a very agile approach of how we look at things, right? So we're looking at what is the least amount of effort that would generate the biggest impact or the biggest splash in the company. And if it's on a scale of 1 to 10, if it's a 1 effort and a 10 output, we do that first. And then we do a 2 effort, 9 output, right? And then a 3 effort and 8 output, or whatever those numbers are in that metric. But that's kind of the model and the framework of how we think about these things, right? So if you look at the process documentation sprint, and then the AI training, and then the operations rebuild, that's what we're able to do within those 90 days, okay? So again, if you look at our example of what I was talking about before of, okay, we had a $20,000 to $60,000 a month overhead. And again, the 20 to 60 range was based on us simultaneously growing an agency and our software company, because we needed development. We needed, in most companies that we work with are frankly they're led by engineers, right? So they're spending 90-80% of their resources building product and doing the thing, not the distribution. And I've made that mistake, and I can talk about that later, right? But that was kind of the problem, is that we had so much overhead going into building and scaling and fulfilling that we didn't have the time to do the marketing and the distribution and all of that. So you can see here, right? We had 20 team members, $60K burn between both business units, ton of vulnerability between ultimately being able, our increase of overhead, cash going out, receivables not coming in, and then the scaling was, and then this is kind of what we needed to do to ultimately increase the valuation, because it was down, and then it did a pop up after we were able to fix those issues, right? And so the scaling is every time a new client we brought on, there was more people we had to hire, more complexity to manage, more risk. And so we had to kind of keep creating this business that we couldn't really operate without that founder or me or my business partner for this organization being always involved. And that was ultimately the bottleneck that most people go through. That's why we've set this up the way we did, right? And so when I talk about this earlier, AI wasn't the threat, right? It was not taking action, right? So if the staff is earning $5,000, $7,000, $10,000, whatever it might be, and they were saying like, listen, we're working for the clock, we're not working for the output. That's the resistance. Like, their incentives are not aligned with the company incentives. So that was definitely lesson one. And so we want to be sure when we're working with organizations that everyone gets the benefit of the output, right? So if you're a sales professional, you are going to be incentivized for generating more sales. If you are a lead generation professional, you are going to get incentivized for generating more leads, because then you'll know for every 1,000 leads how many sales are going to come in, and then you have a formula that scales. If you are in HR or if you are in operation optimization, then you are going to get incentivized for increasing profit margin by having the same amount of output and reducing the overhead or the steps that it takes to have ultimately to fulfill on what you're looking for, right? And so that is where we need to get the incentives aligned within the organization, right? So the automation should not be a threat. It should be an amplifier. The operational bottlenecks, by not documenting those processes that actually work, is going to be a problem, right? And so that's what we're going to go in and fix as well. And so then from there, if you're going to maintain information and they're living in silos, right, that's not going to help anyone either, right? So instead of being feared by being replaced by AI, be fearful of being stuck in the business that can't scale beyond your direct involvement. Again, if you're a founder or CEO or whatever it might be, the people who are not using AI are the ones who are going to be replaced. If you know how to use AI and you constantly improve the skill set within the organization, then that's what's going to help, right? That is how you're always going to be valuable to an organization. So if you look at the data here, right? I guess I'll keep this screen here. So if you look at the actual data, AI is eating the market, right? So if you look at here as far as like the median growth by ARR, if your competitors are scaling leaner and faster with AI integrations, you look at like Jasper, they went from $40 million in annual recurring revenue with 30% less employees than other SaaS companies. So what are they able to do? They're able to take that 30% of margin and reinvest into growth, into doing, more R&D, or, what I call technical debt, right? And then your closing window, as far as the window that's closing for SaaS, is going away very quickly, right? The SaaS operations, they've jumped tremendously, but if you look at where the major investment that is going into companies right now, it has done a huge flip from SaaS to AI companies, because now when all these private equity companies and funds of funds that are that invested in SaaS in 2020, 2021, and they were investing at a 46x multiple, meaning if you were doing $1 million in revenue, they valued your company at $30 million or $45 million valuation. They couldn't keep up with those numbers, and now they have to pay the piper. And so in order for them to figure out how to alleviate some of that pain, they are tripling down on AI ultimately to kind of cover that gap, and also knowing that they know that the future is in AI ultimately, right? And so the unique advantage for kind of what we're doing is we're kind of colliding the two worlds of SaaS AI and understanding private equity when it comes to M&A, right? So the online marketing and AI expertise is we're taking the growth, the systems, and then, from there we're integrating what we've trademarked the AI growth and exit engine, right? So that's what's kind of bridging the wealth gap between the millionaires and the billionaires. And then we're giving the M&A and private equity experience, that experience into each organization, right? And so that's kind of how we're combining those two worlds together. So if you haven't already, feel free to go to agilegrowthlabs.com, go to the resources, get a valuation. This is free right now. By the time you see this, there might be a paywall there, and it is going to be it'll be obviously like a lower ticket, but if you see it for free now, definitely opt in. If you are seeing this with a paywall in front of it, you are going to get way more value than you would paying $10,000, $50,000 for getting your evaluation, because this is not only giving you a valuation, but it's giving you a SWOT analysis. It's giving you all the metrics that you need to increase this number or decrease this number, so you can have a higher acquirability score, higher valuation score. And when you do that, then you're going to be able to see ultimately how to prime yourself for a premium exit, right? And so that this is the most valuable work an entrepreneur or a founder or an operator could do, because now we're giving you the customized feedback of what you need to do to get a higher valuation and be more acquirable, right? And so this is what I did for one of our companies here is, I put in all the information. I did the full questionnaire. It gave me all this information, and then it gave me what I need to do ultimately to increase this number and increase the valuations, right? So create a tiered pricing, build usage and upsells, and then launch add-on features, implement customer success expansion program, meaning take the customers that we already have and then upsell them into other programs that we have, and then figure out how we can expand the MRR separately from the new MRR, right? So new customers versus upselling the existing customers. What do we need to do on the product side? So, it gives us exact playbook of what we literally need to do ultimately to increase these numbers. And then by the time we're done, here are the outcomes of that, right? And how we can increase that valuation. So that is definitely something I would implore all of you to do for this. And I'm going to make this as affordable as I humanly can, because it's not about, making money on this. This is not for me to make money. This is for me to for you to be invested into the process of actually completing this, because we have found that people who are using this for free are not using this to its full ability that it should be. Because I've mentioned before, if I were to go on Google right now and I say, how do SaaS companies, how much do SaaS companies spend to get a valuation of their company? I'm not making this up. It's $10,000 to $100,000 plus to get it. I've seen some that are $500K. It's crazy. And it's still not as good as this for whatever reason, right? It's just not it's just not there. I don't know why, but I spent a lot of time and energy into doing it, and I think it'd definitely be something. I know it'd be something that would definitely help you, right? So here's what you need to do it, right? I give you the site. Go to Agile Growth Labs resources. You'll see the valuation path there. So there's a QR code if you need to do that. So this will give you the valuation health score ultimately to help. And this will kind of break down, your net revenue retention, your gross margin, your CAC payback period. So we'll give you all that information ultimately to help you. So if your number is lower because you're getting in the way of increasing the upside, here are the questions that I'd be asking, right? Are you investing in product features? Are you investing in scalability? If you were to go on vacation or disappear for 30 days, could the business run without your direct involvement? The answer is usually no, because usually the people that we're talking to are engineers-led SaaS companies and AI companies, right? Not your fault. It's all your work. I understand. And from there, would your operations impress or disappoint someone who's looking to acquire or invest during the due diligence process, right? And so, you can take a screenshot of this just so you can kind of have that when it comes to, customer support automation and management and productivity and things like that, right? And so here's the framework, okay? So I talked about earlier on, we have individual frameworks ultimately to help increase the valuation, right? So I have the DATS framework. And again, this is something that is continuously improving, okay? And it's not a one-time project. It's an ongoing thing. So you need to document, you need to automate, you need to train, you need to scale, okay? This can get done with a $200 AI stack. Okay, so you need to document what's working. That needs to go into an automation process. Then you need to train it. Once it's trained and it's working and it's scaling, then you need to refine and improve it. Okay, and then we talked about the AI equity the AI equity engine. So you've got the AI leads, the ops that are powered by AI. Then you've got the investor grade infrastructure, and that increases the valuation of the organization. Okay, so this is the solution for the AI equity engine. This is the DAT system. So this is everything that you need ultimately to have these frameworks and train your frameworks so you can continue to scale, okay? So in 90 days from now, the goal, assuming that you plug in the frameworks, you understand how we're positioning everything, is that you've got the autonomous growth engine, okay? You've got the operational excellence, and these two things need to come first before you get the premium valuation. Okay, and so with the AI foundation is if you don't have the good data, you can't automate what works. Okay, so for example, if you were to generate 100 leads, of those 100 leads, how many of those turned into sales? Of those ones that didn't turn into sales, how do you collect the data to understand why they didn't turn into sales? How do you use that information to go train your AI models to improve the process so you can continue to have that positive feedback loop instead of hand jamming every single thing to generate more leads, more sales? Same thing with doing, let's call it operational efficiency, right? How do you increase the profit margins by removing the repeatable tasks? If you have someone that is an employee and you pay them $75,000 a year to do something that AI can do, and you just feel like you're being a good person by keeping that person around, even though you could replace that role or that function, why are you doing that? Well, because you're a good person. Fine. So if you want to keep them, which you should, then have that $75,000 employee go into something that is adding value into the organization. And that might start with having them learn about AI to replace what they're doing so they can continue to do that in the organization to increase the valuation. More leads, more sales, more cleaner efficiency, stronger documentation, whatever it is. Use that data that you have paid so much money for, money, time, resources, to continue to train your models, okay? So, for example, and I'm going to give you these real examples. These are dashboards that we've built for our clients, okay? So, Shopify infrastructure, okay? So, over, this was from, at the end of last year, end of last year. So, over a 7-day period, okay? We helped this client get $560,000 in revenue. The average order value was 301. They got 606 new customers. Here are the number of new items ordered, new customer sales over time, new versus returning customers, okay? So now we have the data here, okay? And Here's another example of the data. Okay, so if we have this data, it's able to be we're able to use this data, we're able to train it with AI. How do we maximize this? Same thing here. Okay, if we're looking at number of add to carts, number of people who've hit the checkout page, and then the number of purchases that were actually made, that means about 50% of people, or a little less than 50% of these people who were at the checkout page did not buy. So how do we train the data to follow back up with those people who did not buy so we can increase the overall revenue? Okay, same concept here. Okay, what is the average revenue per active website visitor? Add to carts, checkouts, purchases, sales. So you can see there's been an improvement from here to here. So what do we need to do ultimately to increase those numbers? Okay, so if you look at again, more data, and again, this is data that we have paid for, that we have set up, that we need to train so that we can continue to improve these models. And this goes back to the DAT system, right? This goes back to the document, automate, train, and scale. What are we documenting that is actually generating the lead, that's generating the sale? How do we automate that process? Is it automated email campaigns? Is it text message campaigns? Is it stronger ads? Is it whatever? What's the formula? And maybe it's a combination of those data points that actually help generate that sale. How do we use all of that data to go and feed that back into the ecosystem, right? So if we're seeing that we set something up and we've built a dashboard and we're able to see that this campaign only generated a 1.25x return on ad spend, but this one generated 85x return on ad spend, and this one generated a 41x return on ad spend, we know that for every dollar that has been invested, $85 is being generated. For every dollar that's being invested, 41. 27, right? So this is what we need to do ultimately to improve that. And so, if you look at the AGL campaigns, these are the ones that we set up internally, and some of them we turned on or off or whatever, because we needed to buy the data, feed that resource. Okay. So as far as what's available in the market. So if you were to take everything that we shared here and you were to break this down into hiring consultants and agencies and specialists, you could easily spend $100,000 a year to learn and capture and document all of this, okay? So there are specialized firms to implement AI systems. There are, impacts where you can figure out how to do cost reduction, revenue generation, how to implement these systems. And, the market with AI is expanding with 340% growth in SaaS and AI adoption in 2024. Now, there is a big question mark over time that's going to happen. And that question mark is, are people investing in AI to learn, or are they investing in AI to generate the result? And then what we're going to see in the next year or two is that AI programs are going to get shut down within organizations because they don't know if it's working or not, which means it's not working, right? So what we have built is really an internal infrastructure to take everything that I'm sharing with you here and have anyone really apply it within their organization, okay? So we'll do a full ops audit. We'll look at the implementation of what team and what function you'd want us to focus on, right? How do we install those AI agents to automate those identified processes? How do we provide better targets? And the target could be revenue generation, it could be cost savings, it could be a combination of both. And then we want to document, create SOPs, and create performance dashboards so it's very clear, very similar to what I showed you, so we know what to train AI with to improve your results, right? So again, everything here is what we've already built. You've seen it, how we've done it for ourselves. You've seen how we've done it for clients. So this is what our own companies do to generate millions in revenue and provide premium exits, right? I've done this. I've talked about all of the headache already, right? I've showed you our overhead, and I've talked about the agency play of, we had increased costs. We've had people charging per hour. We had collections not coming in. We're developing software at the same time. We're spending a lot of time into engineering, not enough into distribution. So I get that. My reality was this, okay? It was 80-hour weeks, 40K a month in, 40, anywhere from, I guess, 25 to 60K a month in overhead. We had 20 employees that were requiring hand-holding, new clients, more complexity, more problems. So what we have done while I was doing this after we acquired Business Hangouts, when Jet Webinar acquired Business Hangouts, was Jason at the same time acquired 70 companies in 20 months and hit 40 million in revenue. Well, it's not like he spent more money than me. Maybe he spent a little bit to do it, but he structured it in the right way where everyone's incentives were aligned, right? So what we have done internally for ourselves is I've talked about how we've done SaaS onboarding, and we replaced a couple people for onboarding, and that helped us that helped us save 6 figures a year. Okay, and actually it was cheaper for us to do it, and it reduced our onboarding errors. It gave us more time to value, meaning that if it took us 14 days to complete something, that 14 days decreased to 3, and then we were able to get obviously higher client satisfaction scores. Okay, so move this over just so you can kind of see it. So here, if you do the manual, the before was manual entry, account setup, training calls, follow-up, and after it was the collection, AI guided setup, self-service training, and then instant activation from there. Okay, so if you look at the actual reality of what I had was before AI, within a year, we had about $250,000 in costs. And then after we set up our systems, we had about $25,000 in overhead, right? Not including salaries and stuff, just cost of just getting stuff done, okay? I should just say not my salary, but I'm just saying other people and other efficiencies, right? So again, our founders are using this framework, and we're giving you all the case studies. We're giving you all the information ultimately so you can build something that will help generate more leads. That'll generate more sales. You have more automation with what you're doing. And then if you have human intervention, again, I don't want to say all humans are gone, because we need the human intervention to use the human feedback to go improve our systems, right? So I'm not saying we need to go replace everyone. That's not what I'm saying at all. We need the human intervention to go improve our systems and our processes, right? And so other examples that we've done is we've helped with the automation of the prospecting. I used to spend, just to send out proposals, spending $5,000 a month to go send out proposals to people, right? So, we would have a database of people that had RFPs. Then I would train the person to or RFPs, a request for a proposal. So then I would, train them up on that, and then they would do the follow-up, and then they would do the calls, and then they'd have to, customize the cover letters and all that stuff. And we just replaced that, right? That was an easy thing that we replaced. Get higher volume of output, more customized messaging, and then it was just able to accelerate more leads, more sales calls, more revenue, right? And so that was a sales development representative time that was, instead of doing all of the grunt work, they were just focused on talking to more humans, right? And that's kind of where the future is going. We need more human interaction, right? So we're looking for done-for-you installs, document SOPs, clear 30-day, 60, 90-day implementations, clear measurable ROI metrics and tracking so you know what's working and what's not, right? And then we want to take all the knowledge that we have, or that you have as a founder, or your top employee, or whatever it might be, so we can transfer that knowledge into the ecosystem, right? So these are kind of like what's available in here. So again, what are the things that we're doing to improve? Again, it could be the copy, it could be design, it could be ads, it could be follow-ups. It doesn't really matter. We're looking at the functions. We want to understand, on a scale of 1 to 10, what's the least amount of effort, biggest amount of impact that we would have in the organization. And we can replace marketing teams, right? We can help consolidate copy, design, and ads to help unified workflows. So you can kind of see all the inputs that we can ultimately do to help scale these things up, okay? And so with $200 a month stacks, we can replace $20,000 to $60,000 a month teams. I've showed you how we've done it. So if you look at the AI marketing stack, you look at how much we've actually been able to, how much we spent month over month, that's kind of what this is, right? And so we've got complete solutions where we're going through the discovery phase, right? We've got the business valuation, we're looking at the financials, and we're seeing where's the money going, right? That's where we start with, is where's the money going? Let's prioritize the action plan. Let's create let's prepare what makes sense, right? Like what really makes sense for us to focus on. Then we're creating that de-risking, and just kind of removing some of the risk within the organization. We'll provide kind of more frameworks and comps, and then from there we can continue to help you grow or exit. And if you want to keep it, great, keep scaling the revenue, keep growing the business. If you want to position it for an exit, great, you could do that too, right? And so we do this through a 4-week intensive, okay? And this is all going to get done within the it's going to all get done. It's a 90-day program, but we want to just be sure that we're getting the bulk of it done in that first 4 weeks, so we can continue to deliver on all these other things those other 2 months, okay? And so the exit ready resources, we're going to give you the M&A playbooks, board presentations, valuation frameworks, SOP documentation. We want to give you everything and ultimately to increase, okay? So the M&A frameworks, we're going to give you some of these other comps and companies that are using these resources, give you a clear board grade materials to help increase the buyer confidence in multiples. So if you're looking at a private equity, venture capital, if you're looking at a competitor that's looking to do the investment or acquisition, or even if you want to be the acquirer, right? Then you could be the acquirer. Now you have the frameworks to go acquire other companies, and then you could use the M&A framework for that too, right? So it's not a linear path on what you need to do ultimately to help you out there, okay? So we've pulled all these together, right? I showed you the DAT system of the document, automate, train, and scale. We want to give you something where you can have one integrated solution ultimately to help you get there. And so if you are a SaaS and AI founder, you want these investor grade systems, you want to eliminate, just waste as far as just putting, spending money on things that you really don't need to, that could be easily replaced. You need more consistent pipeline generation without hiring more people. You want to kind of follow a proven system and SOP, and you want to have, increase your company's valuation and prep it for an exit. This is for you. If you don't want to, give us the information that we need to help you increase, the valuation. You don't have the data. You don't know how to find the data. You don't want to share the data. You don't have, standardized SOPs, or you don't want to use what we have, then just don't do it, right? If you just want to be in the business and that's how you feel empowered and valuable is when everyone's asking you for stuff, and you want to ultimately be, I don't want to call you the bottleneck, but if you want to be the person that's always moving this stuff across the finish line, then it's not the right play for you, right? And so the core deliverables that we want to give you is the agents, okay? So we're going to do the audit. We're going to figure out where the best path is. We're going to give you the pipeline agent. We're going to give you the boot camp. And then from there, we're going to help you with the implementation over that 90-day time period, okay? And so the value for all this is about, the 10 between the 10K here, 7,500 here, 5K, it all comes out to about 22,500. And again, I've done this where it's high ticket stuff for clients where I just work with them really intensely. And, we've done, $20,000 to $50,000 kind of like monthly projects. I should say projects that have expanded out over 90 days to do it. But I've kind of taken the Elon Musk model where he had the Roadster where he charged $200,000 to super high net worth people, got their feedback, wanted to figure out like what they liked, what they didn't like. And then he was able to kind of create it on a mass scale. So, there's the Tesla Y and the 3. And so that was obviously for more of the mass market, which is exactly what we've done here. Okay. So the 4-week structure of what we're trying to do. And again, this program, I think I mentioned it earlier, is 5K for everything. So the first week is like, we're just getting the drivers and the blueprint. We're helping with the margin optimization of what you have. We're plugging in the growth systems. We're getting you ready for the exit ready roadmap. Okay. And again, as we're doing this is the framework that we're using. The first 4 weeks is usually a discovery phase. The last 60 days is building it out, setting it up, so you're very clear on what needs to happen and just implementing it, right? So this is kind of like a clear schedule. You can download this. You can take a screenshot of what that delivery plan is actually going to look like. And then from there we've got, this is from last year, but I'll update this cohort calendar for this year as well. I'll go through, we've got an open enrollment. We'll do the audit slots. We'll install the agents. We'll do the live session trainings. And so I'll be sure you have all of that here as well. And so this can be $5K up front, or we can just do 2 payments of $27.50 from there. So the value of everything here between the two ops agents, that's $10K. The pipeline agent that I've spent a lot of time building that out for us internally, that's a $7,500 plus the 4-week boot camp, that's $5K. And then we have the Founders Lifetime Plan, which is kind of a SaaS that I've built internally that you will have access to. That will be that's a $5K value, and I've already used that to kind of basically streamline all of our internal operations for our content engine. I'm happy to show you that as well. And then we'll give you the $4K value of the exit board pack pricing, helping increase your NRR, and then just kind of give you everything that you need ultimately to streamline your operations. And the package for all of that is $31,500. You're getting all of that for $5K here. And so again, we have the Growth Engine Pro, and this is just additional bonuses. So the exit engine, the exit ready playbook that you saw in the valuation tool, I'll give you that as well. The valuation health score, I'll throw that in with the AI training workflow, plus the Growth Engine Pro, which is what a content engine, which takes all of our top frameworks. So it'll create your calendar. It'll break all that down. It'll take all of our frameworks and give you a step-by-step process of what you need ultimately to just scale your content engine. And I used to have like 4 people help with our content and our distribution, and I've replaced all that with this engine here. So as far as like the value, so I'm starting out lower, and then as we're doing, this is kind of like the early adopter phase. Then as we are scaling up here, obviously when we're doing more like custom implementation, we can go a little bit higher. So if you're like, this sounds really cool, I really like this, but I want you to really get in there, I'm happy to do all that. And so obviously it'll be a little bit of a higher price point, but happy to work directly with you if you want more of the custom implementation or more of the enterprise play as well. So again, everything here that I'm sharing, $5K to give you access to this if you wanted to start now. If you wanted to use this as an introduction to one of these plans, and we wanted to go further, and you're like, this is really cool, and you're 15 or 20 days into it or whatever, I could just use that $5K as a credit towards our other offer that we have as well. So within the 30 days, we want to at least get your first agent live. Again, I envision this just to work and just be sure that once we set everything up and you're able to leverage all of this within the full 90 days. But I just want to be sure within the first 30 days, you're seeing, you're getting the output, right? You're getting the agents, and you're able to leverage some of these playbooks ultimately, so you can kind of go and scale from there, right? And so the first month of the AI tools, I'll cover that, no problem, and then I'll hand off that cost to you, just as we're kind of going through the R&D process for you internally, right? So we'll give you the tool access, the data sets, the ops owner, compliance with the SOPs. And so once it's, and some of the tools actually for the FAQs, actually our tools are all actually public now. So you'll be able to get access to that. So this shouldn't be an issue. If you're a small team, this is ideal, right? So is your team too small for this? The smaller the team, faster you're going to be able to implement this. And so the tasks that the AI agents are going to be able to handle could be support, customer onboarding. It could be for marketing. It could be for sales, for content posting, for follow-up sequences. And so as far as helping with your evaluation, this will definitely help with your evaluation. This is going to probably require the first 90 minutes up front for just the audit, us getting all the information. And then from there, we'll want to work a little bit more closely with you. That will require 1 to 2 hours a week. And then after the first 30 days, we're going to stick with you for the 60 days after that, just to be sure this is, you're able to implement it, you're able to train it, you're able to make improvements and all of that. So we've done this enough times, so we want to just be sure that we're unlocking more efficiency, more revenue, increased margin, and from here, we want to help increase your valuation. So within the 90 days, we want to help increase your valuation by at least 3.2x. If you're doing on the more of like, if you're a SaaS marketing platform, if you're more of like doing the implementation, we can help replace some of the teams. And within the next 120 days, if we continue to scale and make refinements and improvements, you should have a 4.5x multiple on your valuation, right? So we've talked about the results that we've gone and generated for our other clients, right? We had one client here that was going to shut down their agency, repositioned, refactored everything. We got them to actually sell their company. I believe it was within 6 to 7 months of working with them to get them a 6-figure exit. So it was going to be nothing to a 6-figure exit. As far as other things that we've done as well, helped other SaaS companies do a Inc. 500. So they were listed as an Inc. 500. Then we helped them get to a 4 billion private transition. So basically, private equity company went and acquired a Inc. 500 company through the work that we're doing. So again, we want to just be sure we're installing all of these agents. We want to be sure that we're helping, again, eliminate the cost, helping increase the deal flow, the lead flow, and give you everything that you need to get started. And of course, going to Agile Growth Labs to get your valuation score there. So all you need to do, if you want to enroll, just click to enroll. If you are seeing this and you want a link, just send me a message or a comment in there. I'll be happy to share a link with you there as well. And that's everything. So again, thanks so much. I really appreciate you taking the time to watch, and look forward to working with you, increasing your valuation, and seeing you on the other side. Have a good one.